Hi guys, welcome to Investing with JYK. And today it's gonna be like a bunch of data and how we can find data and stuff like that. So there is a Chinese proverb which is actually a play. It's a word game. It's called 授人以鱼不如授人以渔, which if you can tell, like the beginning part and the end part sound exactly the same, but it's actually for there's it's funny. Like this proverb is on in every single language, and it basically just means give a man a fish and you feed him for a day, teach a man to fish, and you feed him for a lifetime, which is not exactly true because you first have to find the fish to fish, right? But whatever. Anyways, so I thought instead of just giving you the data, and I would show you how, where to find them, and how to think about, at least how I think about where to look for these data. All right, well, here is this thing. Apparently, there's a bunch of places where people say this. So, first, if you want to find out about economy, um, a lot of them are lagging indicators. So that's what my experience as well is like, because the data is collected afterwards. And for example, when I try to find oil consumption data, the latest data is like towards the end of January, which is kind of expected because it takes time to assemble data and then curate them. So some of these are a bit forward looking, which means that they kind of incorporate the people's expectation of how this world is changing. So one of them, which is quite useful, is from this website called Transportation Intelligence thing, FTR. I don't know why it's called. And then Class 8 orders. Class 8 are these ginormous trucks that people use to ship stuff around on land. This is basically U.S., right? Most of the U.S. Freight is moved by truck. So you can see this is this number is actually way lower than 2019, about a third lower. So this incorporates people like the shipping company's expectation of the future. Obviously, this is also impacted by how their fleet ages. So there will be waves of tended to warrant high investment into their trucks. And by the way, trucking companies are extremely affected by this whole by economy basically. If you just look at the share price of, let's say, Wabash, they had extremely tough years in 2009. Look at that. That's that has the essentially people were expecting bankruptcy at that point. 74 cents per share from a high of 28. Okay, so that's a cyclical industry for you. Very dangerous. So if you caught that, then you made a ginormous gain here. You made like 20, 30 times your money. But at that point, it's like, are they really going to survive? So that's going to befall on a lot of shipping companies. So if you look at, let's say, there's a recent a recent IPO. They went public. I mean, well, it's been down since it's an IPO. It's a shipping company. This guy has a huge amount of debt as well. Anyways, so that's beyond the point. So this is one thing, and the second thing is, and then you can look at. So that's on the more on the what do you call those? I would say on the supply and demand both sides. It's just a measurement of economic activity. And this one is more tied to kind of consumer sentiment. It's funny how open data just gives you that data out for free. It's kind of valuable. So let's just look at open data and see how very um, okay, so this is year on year, right? So if you look at year on year, this is actually really, really insightful. It um, if you were watching this data and then you see like a couple of days, this is when sentiment turns. So let's see when sentiment turned in US. It's about here. And this is just all the way down. Now in US, we're 36% down. Obviously, open table is not, um, it does not have the full marketplace in US. Um, and they also tend to occupy, like they also tend to have clients that have like higher uh, prices, right? So if you're going to a steakhouse, it's very likely they have open table because they charge you a monthly fee and then they charge you per head. And yeah, US is down like 36% now. Ireland, I don't know what's going on there, but that's like I I really don't know what's going on in Ireland. It doesn't seem their situation is especially bad, but here we go. Now, you can even look at state level, and that's in US and other places. And in US, well, California is the is yeah. So that's when I've been saying that people don't fear things um, like gradually. It's like suddenly one day it turns, right? So in US, that turning point, well, basically happened around this time, uh, right after the weekend. Well, first of March. Basically, March is when US started turning red, and California maybe slightly earlier. But if you look in New York, I guess that's gonna turn really bad now. New York, yeah, now is like down 54% year on year. Well, one thing is like, okay, restaurant industry, what's gonna happen? Well, first of all, they have to cut their inventory, otherwise things will rot. A lot of things will rot. And they got fixed costs that they have to pay, which does not go down as your revenue goes down. So this is really bad. Um, and in China, we don't have such data, so it's kind of eh. But what I know is that my mother-in-law works in a hotel slash in a resort, in a resort in Hangzhou, which is like one of the high-tech slash touristy place in eastern China, where I was born. And they stocked up on a lot of food during uh, for Lunar New Year because that's when all the people go out and have their yearly gatherings and they would feast for like 7 days and get really fat. But this year that did not happen. So all the food they stocked up kind of went to waste. And for entire weeks, they would have single digit number of clients, like guests. And that's a resort of about hundreds of rooms, fairly fancy ones at that. And they gotta feed their employees nonetheless at that moment. So just last week, I think, they were told, okay, we can no longer continue like this. So everybody takes a pay cut. So they took a 40% pay cut. Normally, when this happens, the the labor the labor administration or something in China will come and find you and fine you probably. because the employees would then basically say, okay, you promised me 10,000 yuan, now you pay me only six, so you're breaching the contract. In this case, kind of everybody kind of knows if the company does not cut their expenses, nobody gets to have a job. And she works for a state-owned resort. So there's government backing, even those which had no debt, and the resort basically was injected into the this company, which is state-owned. So they don't actually have any debt, right? So they have no interest payment, which is kind of odd when you consider that normally these fixed costs, these things with a lot of fixed cost investment would have a lot of debt. They don't have a debt, so they don't have debt. They have enough cash, and yet they still have to cut salary. And this is gonna be like, if this just continues for a month or two, there will be mass bankruptcies for restaurants. And yeah, Washington is basically, yeah, so that's just straight bad. Texas was holding on until suddenly it kind of just turned on around here. So people's mentality is kind of just odd. You can go around and just browse this. So the idea is that you find some large enough player which has a reasonably representative sample of the entire country, and then you can look around. But in this case, just look at, you don't even need to do deep analysis. Just look at the colors, right? And everything is red on the right. Um, and when these go bankrupt, you end up with a bunch of people that don't have a job. And when they don't have a job, knowing what I know about most Americans, they don't really have savings, so they will kind of go into their credit cards and try to, basically survive on credit cards for a while, and then there'll be a bunch of late payments on rents and all that. So that China is slightly better in that case, because even though the newer generation, ones that's born later than like 95, they are more liberal with debt. Um, in general, the population have some savings, and even if you cut their income by, 50%, they'll be able to drag it out for close to half a year, I would say. Anyway, so here is some meetings in Las Vegas. I mean, last time I checked, they were still gonna hold it, but I guess that's gonna get canceled. Oh, it's canceled now. Okay. So this thing is some shipment index, and you can see that this year is about same as 2017, beginning of 2017, which at the beginning of the year, which doesn't look too bad, which it is. I mean, it's not too bad, right? But a couple other things you have to think about is 2017 was a good year, both in terms of economy and the stock market returns. And the thing is that it started off at the lows, and it kind of kept climbing. So the shape of this curve is that they kind of kept climbing towards the end of the year. And 2018 was like the peak, and 2019 was worse. 2020 at the moment looks a bit worse. 2019, you can see that it kind of drops off a bit more than it was doing in both 2017 and 18. So that's that. Expenditures doesn't seem too affected, but again, you can see 2017 was just basically a straight line up, and that basically coincides with the whole global synchronized recovery thing that Yellen talked about when she was the head of Fed. All right, and then you can look at news, right? So you can look at current news. Bay Area layoffs mount swiftly. So what do we have? Well, I can't afford this. So, but anyways, bunch of people getting laid off. And some other things that are interesting is, well, we looked at shipping, and we looked at restaurants, and then you can look at hotels. The important measure, obviously, is occupancy rate. Um, so let's just get rid of Middle East and Africa, and maybe not even Europe. Just keep Americas, right? There's a clear seasonality here, and this number is also lagging. So what you should be watching for, I mean, you can see that the each year is actually getting better since 16 is getting better at the low end, and the top end is kind of keeping about the same. And this is January, so this is still lagging 1 month. And by the time the next month comes out, we'll see some effects already. So that kind of it's lagging. So that's the unfortunate part about this. But you can look at Asia Pacific, and that's the China effect. And this is, and as I said, this is going to all countries, right? So this is what's going to happen in the rest of the world. And we haven't seen this yet. Asia is just a canary in the mine, and we'll see the same thing. And it will go down from, it will be a 10% drop, even worse. That's January. And um, February is when actually things are really bad. So because at the beginning of January, nothing really happened, right? So like people, that wasn't on people's radar. And I expect this to drop further. So you just need to watch this, and that's going to happen in everywhere else. So let's just look at Europe and see if Europe had anything. It's probably nothing. Yeah, nothing. And that is consistent with, that people don't actually grasp the idea, and suddenly they grasp the idea, and everybody stops going to restaurants and stops to travel. And this one is lagging as well, unfortunately. Right, so all you have is December, but this is good for, I guess, if you one is to look at the absolute data. The other way is looking at the rate of change. You can either look at the rate of change. I mean, just look at the uh, I would say the percentage change, year on year percentage change, and you would put that into a spreadsheet, and then you can look at that number. And if you see a deceleration of things getting worse, so if the year on year was negative 10%, now it's only -6, it's probably a good indication that we've reached some kind of bottom. Typically, that's when stock market would pick it up, and that's what's probably, at least that's what I plan to do. It's probably a good time to be bottom fishing. Obviously, it's no guarantee, right? Because if you look at 1929, in fact, I might show that later if I remember. 1929 has an eerie resemblance of what's happening now. And then I was looking at, and this is a very important thing, the Wayback Machine. So we need to be able to predict what is happening, if what will happen to different industries, how much impact that will have things on different industries. And one way is to looking at their promotional activities. And with this Wayback Machine, you basically can look at things from quite a while ago. So at the moment, this is very new, right? This is 2019. So let's look at the current thing. We don't need this more. Anyway, so let's look at 2009 and 2008 and 9 first. 2008 is when people started picking up the news. I think it was September when Lehman went crazy, and Bear Stearns was something like in the summer. So if we look at the summer, when I would say that's like peak, not peak fear, when fear has been instilled into people's minds. Um, the okay, so June-ish, what were they doing? They were doing 13 nights for 849, and you got things like 279, and you can even see this link, right? So that's how many days? 3 nights. So that's reasonably priced. If we look at these 7 nights, let's look at a 7 night cruise. Do we have a 7 night peak season Mediterranean offering two cruises June 30? Let's look at that. So that's peak season. So let's look at peak season, compare apple to apples, right? 7 nights peak season at this, but that people still had money. And let's see if we can find maybe September-ish. So that's 3 months into the fear. And what we have, a 7 night cruise for 249. Yeah. And 8 night for 400. So that's for Thanksgiving. So which is not a particularly high demand season. Let's see if we have something else here. Oh my God. $200 for 7 days. How are they gonna recoup their money? This is beyond me. Usually these they sell for about I would for inside cabins typically $70 per night. So that should go for $400 to $500. And we can look at that here. Yeah, so these are there's some of these are already cheap, and if you look at, whoops, if you look at the peaks, you would see that 2018 is probably a good, 2019 is probably a really good year. So let's see, 2019, what were they doing? And you can tell like how much they actually drop their prices. Yeah. So six Ocean View, that's actually fairly cheap. 71 per day, so $70 per day. And in 2008, that was $50, less than $50. It was something like $250, so $40 per day. And if you actually look at the worst time, it's probably the March of 2009. Let's look at the price there. So that's not too bad. So that is still fairly reasonable, and these are $40. These are 70 and okay, so it's not too much of a difference. I guess that goes contrary to my predictions at the moment. Other things that usually take place at the bottom of the economic cycle is the ones that are indebted start selling their future. Um, when I remember reading in 2011, actually, I is that Citi sold American Airlines sold a bunch of miles to Citi. And why I knew that it was I was into miles because I had no money, so the easiest way is to get miles and then sell some tickets, even though that's not allowed by the airlines. I was able to do that. sold a bunch of tickets to people, and then using miles. And City used to have these crazy promotions with 100,000 miles per for the first year if you spend $3,000 on it. 100,000 miles, if you use it correctly, is close. Well, typically it's around $1,700. And if you use okay, if you spend $3,000, we'll give you something that's potentially worth $3,000. And that was quite crazy back then. So that might just happen now again. So that's actually a good uh, opportunity if if you're into this kind of thing. You might be able to get a lot of cheap miles. Obviously, they start devaluing these miles probably sometime three years later or so. Okay, so what else? We can look at if they're running some crazier promotion, but you need to have a certain familiarity with that industry to begin with. So if you take some cruise normally and you see a increase in promotional activities, that's probably mean that the companies are having a good time. Right? So you have a $200 onboard credit, which is probably worth like $70 in terms of their cost, because they do make a fairly high margin on the sales on their on their ships. And free open bar, that's worth quite a bit of money because usually you have to pay about hundreds of dollars for that. Each day will cost you something like I remember it's like $45. Free specialty dining, those are $30 per person a pop. One excursion is typically around $100. Free Wi-Fi. Wi-Fi, if you buy it, is gonna for the entire trip is it goes about $100 plus. Free extra guest. An extra guest that's actually quite a lot. An extra guest costs about 60% of the fares, right? So this is actually quite heavy promotion. You're looking at 40, so for a 7 day cruise, right? Well, here says up to 3,100 in value. Okay, so let's take a third cut on it. Sorry, let's just value it at third of what it says. You're looking at $1,000 in actual cost the in terms of promotional cost to the cruise line. And yeah. Okay, so the other numbers that I think is important is oil consumption, but that's also lagging, which is unfortunate. And this report, which EIA produces every month actually, is very useful, and you can actually look at a lot of the energy consumption data. Typically, energy consumption is directly correlated with GDP. Unfortunately, we don't have monthly, like last month data. We have like a lag of 3 months. So, eh. All right. And this one, which I showed previously, is the data from China by the Chinese Ministry of Transportation. And last time we looked at it, it was down the rail was down 80%, road was down 75, water was down about 75, and flights was down about 80. It has slightly improved. Um, so, and you can see it on here. This is day on day. This is year on year. Day on day, it increased by 3%. So that's like the pace of recovery, if you think about that way, right? And how you would be able to get this, as I said, you have to get WeChat and follow their account. And we're still looking at about a 765, I would say 65% on average. And and this is, as I said, the high speed, the expressway network increased by 8% because that's free. But that's fairly low when you think about the fact that they are now actually free. Before you have to pay the tolls. Now you don't even have to pay the toll, and it's only up by 8%. So overall, uh, I would say a lot of the traffic, some of the traffic actually went to expressways, and but the rest basically went down quite significantly. So 8% of this is, let's just run through the numbers. 8 times 0.08, 2.26 million, right? And that doesn't cover these because 40% was down 60%, right? So that down 60%, this alone is road. This is road, by the way. So if you do 1367 divided by 0.4, basically, and multiplied by 0.6. So you should be looking at this is 4. Damn it, I'm going crazy. So 13.67, that's in millions, divided by 0.6. So it's 22 million normally. Oh, sorry, wrong. 0.4, because that's down 60%. It's 34 million typically. Right now they're doing 13 million, so this doesn't even cover that. That's just like 2 million increase in number of cars. And yeah, so Chinese activities, I would assume that's still down by something like at least 60% in terms of traffic. And other things, news, recent news, how you would interpret recent news. Well, testing thousands of people for California. California has 44, 46 million people. So what are you're testing a tiny proportion of the population, like really tiny. And here it says Santa Clara County, where my wife is currently at. I used to live there. I'm now like between Shanghai and Mountain View, but I can't get back now because I get quarantined. So 150 kids since the beginning of the whole outbreak. 150 kids out of a population of 2 million. Eh, eh, that the testing is really not there, and once we ramp up the testing, two things will happen. One is that um, you end up with an explosion of number of confirmed cases, because if you don't test, you wouldn't know. So that would be more fear. Second is we're gonna have a better chance of actually controlling it, um, simply because we now know who has it and who doesn't, and it's long-term good and short-term bad, right? It will speed up the recovery, but at the same time, it will spread more fear. And some other things is like you can look, again, this is similar. This one is similar to this open table. So open table is fairly representative of the restaurant industry. DHL would be fairly representative of the shipping industry. And you can, go to their market update. They do it basically every month. And yeah, you can look at here's fairly self-explanatory. And they have this trade barometer thing. And You look at these things, and at the moment, you don't actually see much of a drop, but I assume it will be pretty drastic. And they have some updates here as well, so you can check that out. And this thing is some container statistics website, and you can look at that. They're also lagging by 1 month, but not by too much. But even then, yeah, you have some weird data. I'm not sure if it's year on year or month on month. Month on month isn't that useful, simply because there are a lot of seasonality in this industry, right? Because China just shuts down every year for about 2 weeks for the lunar holidays, anyways, Lunar New Year holiday. So that doesn't really tell us anything. You need year-on-year data. Okay, so oh, on the 1922 thing. Sorry, 1922 stock market. Let's look at that. I remember the drop is okay. So no, that's not actually though. So the amount of drop was about the same. Peak to trough, not even peak to trough, when the whole thing started is about the same. So this one was about what, 350, and then dropped to 200. So 200 by 3, so basically 150 by 300. So that 350. This is a 42% drop. We are probably around here. And let me just see. Let's look at S&P. And we also had this bounce up, which is quite drastic. That kind of reminds me of this, right? And there some eerie resemblance, but don't read too much into it though, because a lot of times it's just by coincidence, and you can always find some similar looking charts. The thing to worry about is whether we're going to end up with similar things happening in uh, in the rest of the 30s down to 33, because this isn't the worst of it. The worst of it happened in 33. So let's see, 1930 recession, Dow Jones. We see if we have a chart. Yeah, nope, that's still not good. Damn it. How Dow Jones chart? How hard can it be? Okay, let's just look at 100-year charts then. Let's go back to 19. Yeah, there we go. Okay, so that was the initial drop. That was the initial drop. And it came back a bit. This is on logarithmic scale, so let's get rid of that. That was the bounce back. So this first drop was down about 30–40%. Let's just do the numbers. 35 divided by 57. I'm eyeballing it. So 40% down, and that was an up. And this is the worst part, because the first drop was basically just the collapse of the blow off top, and then this is the economic problem. And that economic problem lasted from 2019 August to February here. So that's 3 years. Yeah, basically 3 years and 6 months. So I hope we don't go through that, because that is an 87% drop, if I remember correctly. Uh, so if the thing only lasts for the recession, which I think is coming, it's almost no way it's not going to come. The recession, when it comes, if it lasts only a year, then we may be looking at a 50% drop probably. But if it drags on, it will do a halve of stock market again. So if you do two halves, you end up with 75% down. So yeah, so that's always be mindful that an 80% drop and a 50% drop is not a difference of 30%. It is actually another more than 50% down, and then another close to 50% down. Right? So you get halved like three times. I'm talking about emotionally. Emotionally, it doesn't feel nearly the same as just a 50% down. All right. Yeah. So overall, the idea is that find different angles of looking at the situation. There are a lot of data you can get. Use Wayback Machine to look at news, uh, promotion, like price history, news, and all that stuff from a comparable period of the comparable um, period of history that may be helpful to you, and go on from there and come to your own conclusions. And if the data is not trustworthy, which a lot of times can be the case, especially if data is coming out of China, try to look for things that is harder to fake, things that are, if they change it, if they like fake the data, that would leave some traces. For example, if they have bilateral trades, then China's accounting has to balance out with the other side. And other things are like electricity consumption, or road traffic, which they don't find important enough to fake. I mean, the electricity consumption thing is now kind of an open secret, but I would say the passenger count hasn't risen in importance enough that they don't consider faking it, because if they were faking it, why show such a number? If it's drastically down, it's probably real, because if they were to fake it, they will make up a nicer number. And what else? Things that the government don't directly control. For example, the Baidu. Let's just look at that while I'm talking about it. Qianxi.baidu.com. So that is something that's from a private institute. And could this be fake? Yes. Once the government notices that it hinders their ability to fake numbers, this will get cracked down. But at the moment, that doesn't seem too fake, because then you see these drops that correspond to weekends, and they're still quite a bit lower. And this number does feel right, that if you are in China, which I guess is not the case for most people, but if you are in China, you kind of feel that the activity has slowly, I mean, intra-city activity has slowly rebounded, but the intercity travel is still very much down because of this, right? And while we're here, we can look at Wuhan. My guess it's still locked down. Yes, still flatline, and that is a further evidence that this number hasn't been fiddled with. And then you can see there was a slight increase compared to the worst of the times. So there's just a slight increase because things are actually getting better. And then around Wuhan, Xiaogan. Let's look at Xiaogan or yeah. Do they have that? Xiaogan, yeah. That and this is not locked down as closely as Wuhan, so it's rising a bit quicker than the Wuhan data. So that also proves that this data is somewhat reliable. But this is a China specific problem, or yeah, so numbers, you always have to, you know, consider the reliability of that number. Okay, coming to the comments. Richard B. I missed the start on the 30s. How long did it take for figure? For if you don't consider dividends, it was 42, I think. So 13 to 15 years. Uh, Basically, like all the way until Second World War. Is there a way to contact through email? You can always just leave a comment here, and I will try to answer. A short estimate for the next 6 months. Well, I had rolling puts, um, rolling puts since 2017 or 18. I don't remember. I had leap puts every year just because I thought the valuation is really high and statistically I have a good odds. These puts go up like crazy. Now I have some puts that's expiring at the end of this year that I purchased in either 18 or 19, 19 I think. And it was like SPX on 1525 and they go up like crazy. But it's not that because I predicted this happening. It's only because I thought the valuation was ridiculous. And then if I sacrifice a tiny proportion of my portfolio at protecting myself for the downside, then um, then it's just overall it's a better deal. And also I had other preparations for this. Was I had line of credit open uh, on my house that was not drawn. So I just waited there and also have a life insurance policy that I can borrow against, which I haven't drawn down either. So I just you keep some things there just in case things drop really quickly. And I did sell quite a bit of my shares on the week of 22nd of February when I first made the COVID-19 video on YouTube. I just thought like people were underestimating this. What else? For the data, shouldn't you check multiple sources that aren't related to each other but cover the same generic topic, like like for check the rates of different countries? Yeah, of course. But for the virus, we don't have any country other than probably Italy that and Italy and Korea. So you don't have anything to go off with. And when the sample size is small, it's very hard to make any predictions. And Italy and Korea are going completely different trajectories as well. So it's very difficult at the moment, to come up with a number. So that's the hard part. If the first outbreak wasn't in China, it was in a different country. Let's say the first outbreak was in Italy, then yeah, you would have something to go off with. But you have Chinese data, and there's no way you can get the real thing. What's up, chat? Hi. Are there any good free? Yeah, yeah, yeah. That they publish SAIC. I assume you're talking about the Shanghai Auto thingy company. They publish their sales number every year, every month, and those numbers I do trust. Um, it's capital markets of all, and then they have to pay dividends. They pay dividends, and then I think their earnings are real. So they may have some channel stuffing and all that going on, but overall that data should be real. Just go on their IR, and then they publish that every month. most Chinese auto manufacturers publish their monthly sales data. BA puts at 2225. Yeah, BA. I mean, I'm still waiting to get it into BA. I think the duopoly is good, but they even with a 737 Max debacle, they still haven't dropped that much. So I'm just not interested in buying them at what $300. If they drop to 100, okay, and if they drop even further at the verge of bankruptcy, well, Boeing still means something. Like you'd rather still take a Boeing plane than a Chinese made plane, for example, even though maybe the Chinese made plane is as good as a Boeing one, objectively, maybe. Even if that's the case, you would still take Boeing just because there is the brand means a lot. Eh, oh, no, as it is state financial regulators you're talking about. I thought you were talking about this. So, Richard B. I'm not sure which one you're talking about. And let's see. Maybe we should just do a Q&A session later. Yeah, we'll stop this one and we can do a Q&A session just for anything. See you in a while if you're still interested.